In Chapter 4, we're going to be using the skills that we learned in Chapters 2 and 3 to enter our financial information in our accounting records. So we have been practicing so far with analyzing transactions and our debits and credits, and now we're going to actually analyze the transactions and put our debits and credits in our general journal, and then we'll transfer those over to the general ledger, and we'll look at those more closely in a few minutes. So we're going to take a look now at how information flows through the accounting system. As we did in our two previous chapters, we analyzed transactions usually presented on source documents. We've been analyzing transactions from a sentence in our textbooks, and of course we're not going to have that in the office setting. So we are going to be using source documents to figure out what financial transaction occurred, and we'll look at source documents more closely in another slide or two. We're going to take the information and journalize it in our journal, and then we're going to take the journal entries that we made in the journal and post them over to the general ledger. And you'll see later on that the general ledger is where all the transactions for an account are shown and their resulting balance. And then once we're done with all the posting, we're going to prepare a trial balance using the balances in our general ledger. So the trial balance will accomplish the same thing that it did back in Chapter 2. It's going to prove that debits equal credits, but it's going to prove that we have posted everything the way we were supposed to in our general ledger. Now, source documents are any document that provides information about a business transaction, and it is the source for our journal entries. And source documents always serve as backup for the entries in our accounting system. So if we're ever questioned about one of our entries, we should have some sort of backup to show why we did that entry, and the source documents serve as that backup. So some examples of source documents: check stubs or copies of checks. Those are probably the most used source documents in accounting because it shows our deposits, and it also shows our cash disbursements. Cash register tapes and receipts, that's going to show information regarding cash receipts. So we would use these two source documents to enter our revenues. Also, invoices for sales or services that we perform that we are billing our customers for. That's going to show information relating to sales. So we would enter our revenue even though we haven't received the cash like we did with the register tapes and the receipts. And then there are bills that we get in the mail. We probably get bills in the mail every day. So this is going to be backup for our purchase of goods or services. When we got a bill in the mail, we would say if it was for supplies, we would debit supplies and credit accounts payable until it's paid. Now, the chart of accounts is just a list of all accounts used by a business. So these are the accounts that we're going to enter in our general journal, and are also found in our general ledger. And the accounts are also going to have account numbers. So along with the account title, there will be an account number. Now, the account titles and the account numbers are going to vary from business to business. But one thing that they will have in common is that the assets will all begin with the number 1. Some businesses might have a 3-digit account number, and some may have a 5, 6, or 7-digit account number. It just depends on the business. But all the assets will start with a 1. So if I'm trying to find a specific asset account, I can flip through the accounts that begin with a 1 and hopefully find my account. Liabilities are all listed with, or the account numbers begin with a 2. And remember, they're going to be in the chart of accounts in the general ledger in the accounting equation order. So assets will be first, followed by liabilities. Then the owner's equity accounts. Those begin with 3. So the owner's drawing and the owner's capital account number will start with a 3. All revenues will begin with a 4, and all expenses will begin with a 5. Here's an example of a chart of accounts, and notice that all the assets are listed first and start with the 1, liabilities with the 2, owner's equity accounts with the 3, revenues with the 4, and expenses with the 5. And they're should always be in this order. Now we'll look at the general journal. Now this is our book of original entry. This is where we first enter our transactions. And the general journal is really like a business diary. It's where we're going to enter all our financial transactions in the order that they occurred. It's kind of like your personal diary. If you were entering something for today, you would enter January 23rd, 2023. This is what happened. It's the same thing in the general journal. You'll enter the date, and you're going to enter the account that's affected, that was debited. Then you would enter the account that was credited and the amount, and then you would enter an explanation. So the journal has a date, where the account title goes. Sometimes this says description, but I think in this textbook it says account title. You'll have a place for the debit and a place for the credit. This is for the posting reference, and we'll get into that a little bit later. And then you would enter your explanation for the journal entry. Notice that the every page in the journal has a page number, so we can reference that later. And let's see. I think that's all you need to know. Once we start the journalizing process, you'll get a lot more familiar with the general journal. So journalizing is the process of entering a transaction in the journal. And here are the steps. If you can remember the columns from left to right in the journal, then you can remember the steps. You first enter the date, enter the account that's debited and its amount, enter the account that was credited and its amount, and then the explanation underneath that. Now, explanations are pretty important. If you're using a manual accounting system, you would just enter that under the credit. Once you enter the credit, you just enter the explanation for the journal entry. It should be very brief. Everybody's explanation is going to be a little different from another person's. So, it will be in the bookkeeper's own words. It just helps to clarify what the entry was for. There's no set format. Now, if you're using a computerized system, there will be somewhere in that journal where you can actually type in what the journal entry was for. Now, in the journalizing process, we're going to enter the date that the transaction happened, and here we're going to enter the debit first. So on June 1st, Mitchell Williams opened a bank account with a deposit of $5,000 for his business. So cash was increased by $5,000, so we debited it, and then the credit tells where the cash came from. It actually came from the owner. That's why we're crediting and increasing the owner's capital with the credit. And now notice right here we've entered the explanation, the owner's original investment in the delivery business. When you're entering your journal entry, make sure that you always enter the debit first, followed by the credit. Now in CNOW, there's not really any place to put an explanation. It's going to be in everybody's own words, so it would really be impossible for CNOW to grade it. So you'll notice that in your assignments, you really won't have a place for the explanation, but just keep in mind that they are important, because some transactions are obvious and some are not so obvious that might require an explanation. Okay, for a compound entry example, on June 25th, Mitchell purchased a scooter worth $1,000. He made a down payment of $300 and will pay the balance later. So we received delivery equipment. That's going to be our debit. It's increasing by its value of $1,000. We made a down payment, so cash will get credited for $300 to decrease our cash by the amount of the payment, and we're going to pay the rest later, so we know we owe $700. So accounts payable is going to get increased by $700, the amount we owe. And so before you leave a compound entry, you want to make sure that the two credits equal the debit to make sure that your accounting equation stays in balance. Now, the general ledger is a set of all accounts used by a business. Now, the chart of account was just a list of all our accounts, but the general ledger is a set of all accounts. The general ledger is kind of like the T account. It's where we're going to enter all our debits and credits to a specific account and its resulting balance. Now, we're not going to be using T accounts anymore. They were just really there to help us to learn about our debits and credits. From now on, all the transactions that were, or the debits and credits that we're transferring from the general journal will be written in the general ledger along with a running balance. The general ledger is in the same order as the chart of accounts, and the running balance means that every time we enter a transaction, we go ahead and calculate the new balance. Here's an example of the general ledger. So on June 1st, we got this $5,000 from our general journal. We brought it over from the journal, and then we brought the balance over. Then on the 3rd, we had a credit of $2,000. We paid rent or something. So we've decreased our cash by $2,000, so now we need to get a new balance. So if we have a debit balance that exists of $5,000 and we credited it for $2,000, we're going to subtract those two figures and end up with a $3,000 balance. Now remember, just like on the T, the balance goes on the side with the higher number. 5,000 is greater than 2,000, so we're going to stay on this debit side. And since cash is an asset, its normal balance is a debit. So if you end up with a credit balance in an asset account, that's not normal. So that should be a red flag to you. Okay, then we made another payment for $600. So $3,000, the previous balance, less the $600 payment. So we have a debit and a credit. We're going to subtract the two, and we've got a resulting balance of $2,400. Now we have another deposit or an increase for $2,100. So we have a debit of $2,400 and another debit of $2,400 or $2,100. So we're going to add the two debits and we get a debit. Okay, so remember, when getting your running balance, if you have a debit and a credit, you're going to subtract. If you have a debit and a debit, you will add and get a debit. If you have a credit and a credit, you'll add the credits and end up with a credit. And that'll happen like in your accounts payable, capital, and your revenue accounts, the ones that are increased with credits. Okay, so here we've got another a credit for $1,000, a debit of $4,500 with a resulting balance of $3,500. So we will, after every transaction, we're going to get a new balance, and then our final balance at the end of the month here is a $470 debit. And another thing I wanted to point out is that the first debit and credit column, that is for the debits and credits from the general journal. This debit and credit column is for the resulting balance. So be careful and make sure you don't slide your transaction figures over to the balance side. Now, when we copy the debits and credits from the general journal over to the general ledger, it's called posting. And we want to post our transactions at least daily so that we can keep our balances up to date. So the steps in posting is to enter the date of the transaction from the journal, enter the debit or the credit from the journal, enter the new balance of the account after the transaction, and then enter the journal page in the posting reference column of the general ledger, and then enter the ledger account number in the posting reference column of the general journal. And we'll look at that here. All right, so here's the general journal. This is where earlier we debited cash and credited capital for Mitch's investment. So now we're going to transfer this down to, we'll post this cash debit. So on June 1st, I'm going to come down to my cash account in the general ledger. You know, your general ledger will have an account, a set for every single account you have. So this is the cash account. So I'm going to enter the date, and then I'm going to enter the 5,000 debit here, and then I will enter the balance. Since cash did not have an existing balance, we're just going to transfer this 5,000 over because it had 0, and we put 5,000 in, so now the balance is 5,000. Now, if you look, this general journal has a page number, page 1. And so we're going to enter a J1 for journal page 1 to tell where this transaction came from. So if 6 months from now I want to know more about this transaction, I can go to journal page 1 and find the transaction, look at the explanation, and I'll know what the $5,000 was for. Now for the journal, I'm going to take this account number and enter it in the posting reference column here, and it's going to indicate that this $5,000 was debited to account 101. After all the transactions, let me make sure I didn't skip a slide. Yeah. After all the transactions have been journalized and posted, we're going to pull a trial balance. So if you remember earlier, that cash account had a debit of $470. So we're going to take the ending balances of all of our accounts here and enter them and make sure that the debits equal credits. And you can prepare a trial balance at any point. You know, moving figures from the journal over to the ledger really opens up a chance for errors. So you can pull a trial balance at any point to make sure that you've posted correctly. And you know, it serves the same purpose as it did back in chapter 3. It just proves that debits equal credits and that the accounting equation is in balance. So since there is potential for error, sometimes your debits and credits on your trial balance will not equal. And if that happens, recheck your totals. Just add the columns one more time, because I know that when I add columns, I usually make a mistake on the first go round. So just check them again to make sure you come up with the same figures. If you're still off, find the difference between your debit total and your credit total. So just look to see if that number, that difference happens to be familiar, and maybe you just forgot to post a debit or a credit from the part of a transaction. If that is not the issue, then divide the difference by 2. Because if you happen to have debited twice instead of debiting and crediting, then you'll be off by double. So divide the figure by 2 and see if that looks like a familiar number. And if that doesn't work, divide the difference by 9. And if you divide by 9 and you don't have a remainder, then you probably committed a slide error, which means that maybe you wrote 480 instead of 4,800. So that means you've dropped or added a 0 to your number, and those are really hard to find sometimes. Or you've made a transposition error. So if you wrote 54 instead of 45, the difference would be divisible by 9. So be looking for those types of errors if the difference between the debits and credits is divisible by 9. And if none of that works, you're just going to have to trace all your postings and redo your math in the general ledger to make sure you haven't made an error there. Sometimes we enter in our journal an incorrect journal entry, and it gets posted to the general ledger. If that happens, it's better to make a correcting entry. So if you're using a manual system, you don't want to have erasures in your manual system or whiteouts. That may make people suspicious. So you never want to raise any suspicion when you're dealing with other people's money. If you're dealing with a computerized system, you do not want to delete transactions because that looks fishy as well. So what you would do is make a correcting entry. So in this example, we'll assume that a $400 payment for rent expense was incorrectly debited to repair expense. So our entry in our general journal initially was debit repair expense and then credit cash. Well, it should have been rent expense and not repair expense. So we know the cash credit was okay, so we don't have to do anything with the cash account, but we've got to do something to get rid of that $400 debit out of the repair expense. And so to do that, we're going to credit repair expense for $400. So if we have a repair expense debit that we made an error and a $400 repair expense credit, they offset one another, and the balance in repair expense goes back to what it should have been. Now we need to get the rent expense on the books, and we would do that by debiting rent expense for the $400. So debit rent expense and credit repair expense would be the correcting entry for this error. And it would be very important for you to enter an explanation for this journal entry, because that is a very odd looking entry. Okay, so we do have some assignment demonstrations in Blackboard under the chapter folder, and be sure and notify me if you need any help.